In this week's Market Game Plan, Jim Cramer discusses the ongoing bull market and the Federal Reserve's role in its continuation. Despite economic uncertainty such as interest rates and the upcoming election, he shares his game plan for the upcoming week, which includes earnings reports from companies like SAP, General Motors, Texas Instrument, Tesla, IBM, Lam Research, T-Mobile, and others.
Giant and Nucor, America's largest steel company. S&P has been delivering stellar results as it advises companies on tech strategies, including cloud enterprise resource planning and adopting artificial intelligence. They're very good. They have a lot of ideas for you, but a lot of companies love to sign up with them. Nucor's tough, though. See, while steel pricing is weak, the old hedge fund playbook says you should buy steelmakers like Nucor after the first rate cut because that's when their stocks typically start to turn ahead of pricing of steel. Could be an interesting level to get long here. Tuesday is one of the trickier days to navigate. In the morning, we have General Motors, one of the cheapest stocks in the entire S&P 500. The traders believe GM's future earnings will collapse or it would not have such a low priced earnings PE multiple. I think it's a bargain, even as it may be hurt by tariffs on Mexican-made cars if Donald Trump wins in November. Tuesday is also a real big aerospace morning with numbers from RTX and GE Aerospace. Now, both stocks have been flying high. I bet that continues after the report, and most likely they will raise estimates. These are two fantastic, well-run companies. Now, one of my Travel Trust favorite companies is Danaher. It's an amazing life sciences conglomerate that I think might be ready to return to its old greatness. The stock's been doing nothing for ages. But then again, Danaher can't outrun its clients, and its clients are new young biotechs with deep pockets. Unfortunately, that's a scarce commodity in this environment. Still, there are enough young biotechs, and of course just older healthcare companies that are out there that I bet Danaher can tell a story of an expanding client base and growing orders. It's a very important position. We covered it this week when we did our monthly meeting. I'm obviously on tenterhooks about it. I am concerned because it has not done well. Next up, there was some back and forth about on Procter & Gamble, but all in all, people are okay with today's earnings report. Well, they like Kimberly-Clark more. These two mortal enemies butt heads constantly all over the globe, but Kimberly-Clark's been in reorg mode, and it's working. Now, we have so many winners reporting, but there's one laggard that I figure could break out here, Norfolk Southern. It's got a new CEO, Mark George, who I think will bring some financial discipline to this great railroad. Norfolk Southern could put up some excellent numbers. Previous CEO should get some credit for that, by the way. After the close, we hear from Texas Instruments. We've been hearing a lot about how semiconductor companies are in the doldrums, the ones without AI, that is. Texas Instruments falls into that category. But this company's become much more focused. I like it ahead of the quarter, even though it has a little more cyclicality than most chip makers. I like it because its rates are coming down. Here's a shocker. No matter how poorly Boeing is run, and it's become the benchmark for bad management, the big institutions are possibly Pavlovian about buying the stock. They can't get enough of it. Boeing has to hope that the buyers can maintain their appetite through an already miserable pre-announced quarter because it needs to sell about $25 billion in stock to fix its balance sheet. And I'm betting that deal could come very, very quickly. Maybe even the day the company reports. If you really want to own Boeing, save your powder until after the secondary offering, as it'll most likely come at a nice discount. The flip side of Boeing, sometimes companies can practically print money simply because they're so well run. Take Coca-Cola. Under the steady hand of James Quincy, Coca-Cola has become a low-risk juggernaut with a solid dividend. Definitely a stock that is worth owning. Data centers remain one of the hottest themes in the market. And if you're looking for a pure play, go with Vertiv, which makes electrical equipment for these warehouses full of servers. Now, that said, this stock is so red hot that it might not be able to rally on earnings unless it raises its forecast to unfathomable levels. Then again, Vertiv's business is so strong, it's so strong that unfathomable might be fathomable. After the close Wednesday, it's Mega MAGA Man Musk and the Tesla show. People didn't like his recent self-driving presentation, so I think he's going to try harder to deliver a really good set of Tesla numbers because they have been lowered and lowered and lowered, so you can beat them. That's when Elon Musk does his best work. IBM also reports after the close, and I bet we'll get another beat-and-raise quarter. Why? Because it's become a beat-and-raise machine under CEO Arvind Krishna. Enough said. Earlier this week, a semiconductor capital equipment company called ASML rocked everybody's world by giving out a ridiculously poor forecast. Is every company in the industry of capital semiconductor equipment similarly damned? We're going to find out when Lam Research reports. Now, Lam Research is a much better company than ASML. I think it'll tell a good story. I think it's got a healthy buyback. Very risky, though, if it's just only because expectations have been lowered here, it might work. But the problem with Lam is that what happens if ASML is at all right? then Lam won't pop. But that's not that big a risk. One serial beat and raiser is T-Mobile, and they reported to the close. Can he keep up the winning streak? T-Mobile's had such an amazing run that I'd be a tad circumspect here. Maybe by half and by before the quarter reports and then half after. Thursday's jam-packed. For starters, I'm going to be with Chevron in the Gulf of Mexico. Can't wait. But what about earnings? Southwest Air is looking at a long and hard proxy fight because it hasn't been willing to give in to the demands of Elliot Management, a very, very smart hedge fund. I think Southwest would have an easier time fending off the activists to report a good quarter like what we just got from United. Honeywell recently announced a major reorganization, but can it match that with some good earnings numbers? You know, that last quarter was just okay. In the interim, we got the reorg, and the stock is soared. We own this one for the Chapel Trust, and we're telling members of the club to stand pat. Could this be the quarter that gets UPS out of its funk? It's possible. And that almost 5% yield might cushion the blow if something goes wrong. There was a time when people seemed to ignore the success of David Gitlin at Carrier. Not anymore. You can't. The stock's getting its due. It's now had such a big run that this climate control player may not pop on the earnings numbers, but I sure think they're going to be strong. We keep wondering how Hogue is doing and whether it's still taking share from Nike. Hogue is a division of Deckers Outdoor, which reports after the close on Thursday. I anticipate a strong number for their insurgent running shoe division. More Clockwork love. Texas Roadhouse. Everybody seems to love this favorite restaurant chain. It's got $11 dinner everybody's raving about. Put it up there with Brinker and Wingstop as winner chicken dinner. Finally on Friday, we got Colgate-Palmolive. And here's one where I stand. It doesn't matter where I stand. Now, I say this. The street... It's kind of an unnatural thing, frankly. The street loves Colgate-Palmolive. I think that the love is way overdone. But that does not matter. Colgate always wins. Kind of drives me crazy. I just want to find out what people really think that they love it so much, but it doesn't matter. It's inscrutable.